for which you have to pay back the loan for the device, right?
Okay.
And now this mobile application, which is pre-installed, secures the investment that the bank is making. So the bank now has signed a partnership. Stanbic Bank has signed a partnership with this company to be the financing partner of the devices. So
Great.
they make the upfront payment. So they are releasing the loan. The telco is now the front-facing person, and the telco uses their channels to sell the phones and sell their bundle, cross-sell their bundles in the process of selling the phones. Right now, the phone supplier is also getting access to market directly through the tax, a share of whichever transaction goes through their app to pay for the phone every month on the subscription basis. And this is a classical example of how we took them from an app purchasing campaign to still focusing on their core competence as a tech company, but leveraging an existing value chain to solve their problem. So they never had to invest in hiring key staff or key resources to man the operations of their business.
Yeah.
They can
So the what?
bootstrap
Okay.
their way and scale on the same platform in other countries.
Yeah. So the word that comes to mind quickly is commercialization. So it seems you guys are doing a lot of that for a lot of the companies that you are
Yeah.
working with. Yeah, great. So I want to move on to Paul. Paul, so my question for you is more around kind of like companies moving from startup to SME, right? Because I think, you guys at EDC work with companies that are a bit bigger than, companies like Mikasa and Ware Ghana. And I think you guys also, do a lot of advisory services to help these companies get to a point where you can serve them better. So could you talk to us a bit more about what kind of companies or startups or SMEs have you been working with in the past? How have you been helping them to be able to establish themselves better? Hello, Paul. Please unmute.
Sorry, thank you. So I would want to start by saying, talking about entrepreneurs or entrepreneurship. And for me, one of the basic tips you will need to take off is to be able to build up a little capital out of your own savings. Okay, so on that level, we have investment products where even when you're a student, you can be dropping in some coins, 20 CD, 50 CD, 100 CDs, little by little. Because you see, the thing is, we support companies to grow, but until you have demonstrated some success, it's difficult to come along to provide it for everybody. Because a number of individuals and institutions, I mean, the funds are not our own funds, the funds we manage for individuals and institutions. And we have a duty to make sure that every extra we are providing, we are giving out, comes back. So you need to demonstrate some success. So on the elementary level, the first support we are providing is for people who want to put money away to start up their own business little by little. 50 CD, 100 CD. I have too many stories in that area. Students who started with 100 CDs and are throwing 50 CDs every month, and by the time they are ready to start up, they have their 5K, they have their 10K, they have their 20,000 CDs at capital to start. So that is one level. Beyond that, for those who want to expand, and normally we look at the we are looking at two options. We are either looking at debt or we are looking at equity. Debt or equity. They all come with some advantages or disadvantages. The role we will normally play in this would be providing advice as transaction advisors, helping you understanding your business, understanding your books, so we can put together documents and then pitch to the other side, those who have excess capital or excess supply, who can bring money into your business. So we've done that for a number of companies. And you see, when we do Um, one of the things I've noticed is we have a number of entrepreneurs. They can come on board to make contributions on this. A number of entrepreneurs who want to keep 100% of the business. Very few of them are willing to go in for equity finance. Equity finance here meaning that you are selling part of your ownership to a third party. But what most of them refuse to recognize is that sometimes it's better to have 50% of a million than to have 100% of 100,000. So you may lose part of the ownership, but at the end of the day, you are getting a smaller percentage of a bigger pie, which is bigger than you having the entire pie. And when you look at the billionaires around the world, you find very few of them who own 100% of their business. They have a stake, but other people come on board. So very few people will want to look at equity. So majority of the transactions we've done would be for entrepreneurs or SMEs who are looking at debt financing. I normally will arrange something like 6 months, 1 year. We can refinance on maturity when these companies are not ready, organizations are not ready to be able to pay. We raise new capital to pay off, and then they can continue to run their businesses. When we look at this debt financing for these clients, normally the clients are happy and the investors are happy because most of these SMEs will struggle to get financing from the bank. Okay, they will struggle to get financing from the bank, and the rates are sometimes very high. Now, for the transactions we've done, we've managed to convince investors to go in for rates that are lower than what these investors would have been paying if they went in for loans from the bank. So the loan is the rate is slightly lower than the bank rate, but for the investors' point of view, it is higher than what they are getting in the risk-free and other investments. So at the end of the day, you have both sides win. But the trick is that we need to make sure that the business is structured such that these investors are sure that they will be able to receive their money. Whatever they are putting in are likely to come back. And once they are sure this money will come back, of course, we know investment is risky. There is nothing like to risk-free. Even government securities we call risk-free. We've had situations where countries have defaulted even on risk-free. So there is nothing like risk-free, but we want to manage the risk such that the probability of default is very small. So we've done this for a few companies.
Okay, great. So I have, so I was asking more about the kind of advice you give to the companies that you work with so that they can set themselves up to be able to get investment. So if you could answer that. But I have a follow-up question based on what you also said. So sometimes we hear about, angel investors and, different investors locally. A lot of the times, they are looking at alternatives to investing in startups in Ghana, right? Doing treasury bills or things like that. And it seems you guys are a bit of a go-between from what you're explaining. So do you tend to work with, people you would call angel investors? Are these, like, if we know people like that, should we bring them to you with the idea that they can eventually invest in some of the startups who are not getting money from them through EDC? So that's my second question. My first question more is around how you guys, advise or help with the SMEs to be in a position for them to get support from you.
Okay, thank you. No, we don't work with, not yet. We don't have any angel investors with capital waiting to invest in some of these companies. So we don't have that. But for these startups, in fact, we are not like an incubator where we are holding your hands and shepherding you through the process. We will normally come on board when you need financing. So we do the arrangement for you, we raise the financing, we take our fees, and we walk away. That is it. But for the few, even though that is not our focus, but one of the things we want to look out for, and I think that I can talk about that. When it comes to identify potential businesses we would want to shepherd investors to be investing in these businesses, one of the biggest things for us is character of the entrepreneur. Who is behind the entrepreneur? How are they carrying themselves? I am a personal background, so you can understand why I am in the suit in the afternoon. But if you are an if you are an entrepreneur and you need finances and you are driving some kind of vehicles, immediately it's a no-no. And we've seen entrepreneurs who have collected monies from investors to buy vehicles. But the reason why we want to help you raise money is to expand your business and not to live a lavish life and marry extra wives. So for me, the big issue is about the character of the person.
Okay.
It's about the character of the person. Character. It's difficult to measure that, but when you engage people, when you encourage them to talk, you get to know what they have in mind. And when you study them, the way they carry themselves and all that, you know whether they are looking long term, building the business, or they just want to get money to look good. Because don't forget, one of the challenges we had with the financial crisis in Ghana is a number of them were in conglomerates, where you have an entrepreneur who has 6, 10 different businesses all over trying to rub shoulders. I have 20 companies, I have 15 companies, I have 10 companies, and at the end of the day, there is no focus. At the end of the day, there is no focus. So we want to see how focused you are so far as your business is concerned. And entrepreneurship is not cheap. It's not easy. You must be willing to work hard. You must be willing to deny yourself of some pleasures. You must be disciplined. We want to see that discipline, that focus. Entrepreneurship may not be for everybody. So if we can see that discipline, that focus, that commitment towards your business, that character, then we are willing to have a conversation and possibly bring other investors also.
Okay. Thank you so much. So when you talked about lavish, one of the things I, thought about was sneakers and the different costs of different sneakers. And you talked about commitment, so being able to move around and really getting the work done, going everywhere, really showing persistence. First, I wanted to come to you. So you've talked about staff mentoring from the Stambik side. Irabina talked about, her experience, working in the corporate space, and I'm sure, the lessons from there have really lent well to, working on Where Ghana. And it's something that I saw a lot too, personally, when I was working at Rankard, that, working at, some, mid-sized companies or companies like this really allow you to be able to understand how companies should work, operations, and it helps you to be able to operationalize your company. So I want to talk a little bit about how at Stambik, with the staff, you guys are able to help imbibe some of the operational things, some of the lessons from 20 years of doing business in Ghana, with the entrepreneurs themselves. So as opposed to the commercialization and how you kind of do something, this hand holding, what kind of, skills do you think a lot of them get from working with, the staff and, through the incubator?
Great. So I think also picking from lessons and patterns I've seen in the businesses we diagnose from time to time. Some of the things they lack is really governance structure, right? What is the minimum version of a business structure you need to have to get your business running? What basic documentation do you need to keep track of?
Okay, first, I think we lost you for a moment. Hello, Foster.
What's the importance of having a reporting and audit? Hello, Apo.
Yes,
I can hear you. Can you hear me?
yeah, but we lost about 10 seconds of what you were saying. So if you could just go back a thought. Hello, Foster. Hello, Foster. Okay, so whilst we wait for Foster to come in, I want to fill my questions for Kelvin and Rabna. So I have questions for you just before we open up for everybody else. Kelvin, so my question more for you was, based on the industry that you've been working in, I'm sure, and I've seen a lot of Mikasa's growth. I subscribe to your newsletter and things like that. And I've seen you work with a lot of, different companies in the real estate space, like much established companies that had, much more revenue. What are some of the lessons you've been able to glean from working with them that has helped make Mikasa better, right? Or has helped make Mikasa grow? So by working with some of these established companies, what have you learned that you've taken into Mikasa to make it better? So that's my question for you. And then Rabina, you talked about how you've been working with some more corporate institutions now. So I wanted to, it's a similar question for you. Like, what have you learned from working with them or talking to them? And also just within the growth of Where Ghana as a brand, how you've been able to establish yourself more. I know that you changed your where you guys work out of, so there are some things that you guys are doing to give yourself a better footing. So my question for you is like working with some of those bigger companies, and then in your growth of establishing yourself more, structuring yourself more. So those are my two questions for you. Foster, can you
Yeah,
continue?
I'm back.
Yeah.
Yeah, I can hear you now.
Yeah, so if you could continue, I think we missed the last 15 seconds of what you were saying.
Okay, so I was saying that one of the things we see that lacks amongst the businesses is governance structure, right? Understanding what's the minimum version of an operational structure you need to have as a business to kickstart. And so one of the most recently during the COVID period, one of the entrepreneurs approached us that they had a challenge with managing their human capital, that's like their team. They were starting to commit less and less to the business. So we engaged our human capital business partner, one of the senior partners in the organization, to spend some time with this business. And then they realized that after diagnosing their problem, they realized that the business, when he was hiring, they started this on campus, migrated it after they graduated from the university, and just started to hire people like delivery service guys. It's an e-commerce business, and they sell electronic gadgets, right? Delivery service guys, operations guys, sales guys, stock manager, etc. They didn't have any JD for them, so there was no job description for them. There was no standard operating procedures. There was nothing, like they didn't have clearly defined visions and mission statements that everybody knew and could recite on their own and all of that. And they didn't see this as important in the beginning. But they realized that as they started to scale, they got stuck in terms of their growth, in terms of their turnover, because the team was not performing better. Decision making was no longer horizontal, but required a certain layers of decision making and authorization to get things done. So we spent 4 weeks engaging this business to help them restructure. And by the time they finished the 4 weeks coaching session, they had put together an entire standard operating procedure for the organization. They have put together an entire organizational structure manual, an employee manual, policy documents, JD for every single person. They had instituted performance review management and adopted a few technologies to project manage the team like Trello and a couple of other tools. And now their operations are streamlining. I checked their growth. They report to us every month on Have and Fund, which is a portal we use to manage each of the businesses. And check their growth from May when they face the challenge to now, their revenue has shot up by like 40 something percent, which is a clear impact of what they were doing before and the challenges they were facing and how it was impeding their growth. So we try as much as possible to identify some people in the organization who play these key roles directly with supporting various functions of the business. If it is within marketing, finance, operations, HR, etc., we always find someone who can fit that goal for that business.
Thank you. Yeah, so it's great you mentioned having fun. I know it's run by a MS product, Camille Nabon, who I work with at Cosmos Innovation Center. It's a great Ghanaian product, and I just wanted to shout them out. Okay, so Kelvin and Irabina, please wrap us up. So I'll take
Yeah, I agree with you.
Kelvin first, briefly, and then Irabina, you'd have the last word. I think we have about 5 minutes, so 3 minutes each. Kelvin.
Sure. I'll be really brief with my answer. So, I mean, we work with a lot of different established businesses. One of the things I personally studied in the beginning was the company culture. You know, when you set up as a software business, you're very likely to want to copy the open style of culture where employees could directly come to you as the boss. You want to give people the opportunity to come up with different ideas to contribute to the growth of the business. And then when we started working with a lot of these developers, there was a lot of power distance even before you met with the head of money, the head of sales. You had to speak with a junior staff first, or maybe there's a gatekeeper that you have to convince, before you get through to meet with the decision maker. And I took a step back to reassess, because I mean, we started with an open culture thing where employees could send me email, call me, Kelvin, I have this idea. I think if we implemented it, it would be great to grow the business. And I allowed people to feel free and do whatever they wanted, because I just wanted to focus on the business. But then I realized that trying to do the open culture thing was not helping, because I mean, it was creating a lot of very, very small conflicts, which, if you're not careful, you'll be spending a lot of your time managing. Because it was just me. I didn't have any, in the beginning, I didn't have any senior managers at the time. I was the head of sales, at the same time, head of marketing. Even though I had people doing marketing and sales, I was still managing those two departments. So I had to kind of copy their power distance culture a bit and put in some structures, but it's still that freedom, to come to me and all of that. But I put in processes. If you wanted something done, or if you had an idea, please send me an email, or there's a Google Doc that you can directly do that and put that communication in there. Rather than
that's the easiest way to do for startups.
Yeah, because I
and
know
effective too. Yeah.
It makes it very easy. But from the business perspective, I think what I also learned was that the bigger corporations or bigger companies spend a lot of money and resources building their brand. And I mean, it's no brainer that Africa and Ghana, for example, trust is a major issue. So a lot of businesses want to start off by spending huge sums of money and resources to communicate to their potential client that they are the one trusted company that you can deal with. And so if you realize, because we took a look at our competition and we saw that even though they spent a lot of money on marketing, TV, radio, billboard, they could not attract a lot of these clients. So you go to their website, but you wouldn't find a lot of these big companies advertising. So then we also took a cue from there and started studying how we could build a brand to match theirs, so that they'll feel very, very comfortable to work with us and see us as partners. So that also really helped.
Yeah. Okay. Thank you. Yeah. So branding and company culture.
Yeah.
Great. Yeah. So last words with from the company that wants to build a very great brand. What are your words? But over to you, Rabina.
Africa's most loved brand. Yeah. So for me, the thing that has been most striking, every time we have opportunity to work with more established businesses, has been just how receptive established businesses and established entrepreneurs are of how welcoming they are when they realize that here's a small business, but they can see potential. And so it's important that as small businesses, we, one, learn to tell our stories, but also present ourselves in ways where more established businesses have the comfort to deal with us. So when it comes to things like trust, how are we meeting our deadlines? How are we speaking their language? So there's a procurement procedure. Can we respect that? Do we understand what withholding taxes mean? Are we duly registered everywhere we are supposed to be registered? For me, that's been one of the most striking things, that when more established businesses see young businesses that are willing to do what it takes, they are pretty much very, very welcoming, and also give you referrals so that your business is able to grow. It's been a very pleasant surprise for me. And I hope that as we grow, we are also able to open doors for younger businesses that are coming up. And in terms of how we are growing, I think entrepreneurship, it's a journey of understanding oneself. And so as time goes, as the journey evolves, the entrepreneur themselves and the team that they are building get to know themselves, one, better, get to know the market that they're operating in better, and just find, it's a journey where you are fine-tuning the business model. So for example, we started from a place where one of the most important things for us was, we are making clothes, we make one thing for you, we are not repeating it for anyone else. So we're really big on, we are proving our strength as a design house. And then with time, the market proved to us that that really isn't the gap that exists in the market. People are looking for how they can buy African-themed clothing, make it ready to wear. Like one of our customers describes the process: I want to be able to buy my clothing the way I buy my pizza. And so then we tweak the business model until you get to the point where there's a big enough market that you can address. So we are not done learning at all. It's been 7 years, surprisingly, but it's still very early days yet when you look at the kind of company we are looking to build.
Okay, okay. Thank you so much. I think this is about, I don't know if now you're with us. Yeah. So I think there are a lot of things that came out. For me, I mean, I think some of the big takeaways, I like, what Kelvin said about company culture. I think branding is very important. I think we've learned about that. From the Stanbic side, working with so many, startups, being able to figure out what your vision statement is, what your mission statement is, where you are trying to go. And I think one interesting thing around it, especially for companies and even as you establish, is sometimes a lot of startups end up, going after different types of business and different types of contracts that are kind of very different from, their core competencies and things like that. But, once you have your vision and your mission and you know what you're looking at, even if you're going for something that is outside that, you find a way to, link it back to, what you want to do as a company, so that you continue to build your brand. So I think that is great. And Paul, thanks for also what you said. Talking about, guys have to come ready. Ensure that you're in the right places, and the character. I think the character part is very important. Kelvin, you might, I don't, that might bring you some memories about some startups you've seen who get some money and then start just buying things all over the place.
Yeah,
So
that's
yeah,
right.
so thanks for sharing that, Paul. And now, yeah, so over to you. Thank you. Hello, Na. Okay, so yeah, I just remembered something. Okay, I just remembered something quick that Ravna said that I want to rehash, about, working with even younger entrepreneurs, helping them do better and, sharing these lessons with them. So thanks for saying that, Ravna. Hello, Felix. Over to you. Thank you.
So are we expecting questions?
Okay. I think Felix. Felix, are you back?
Yeah, I'm back.
Yeah, so we are done with the session. I think I was chatting with a couple of your team members, and you said there wouldn't be time for questions from the audience. So we are through, unless something has changed, and we can take questions from the audience.
Okay, all right. Okay.
Hello, Felix. Okay.
Yeah. Hi, Atul. Our internet connection is very.
Okay, so yeah, what I wanted to know is, are we done, or are we moving on, or do we have some time? So I think that's what we wanted to know on this side.
Yes. Okay, so we are. Yeah, we are.
Okay. Sorry, I didn't. Okay, so our session is ended. I want to hand over to Felix. So yeah, so I mean, thanks so much, especially those who are watching us on Facebook Live. I hope you've learned a lot. And please, let's leverage these learnings to make our communities and our country much better. Okay. Thank you. So yeah, let's go on and make things happen. So thank you, Kelvin from Mikasa, for joining. Thank you, Rabna from Where Ghana. Thank you, Foster from the SB Incubator. Felix, over to you as we leave you.
All right. Thank you very much, Atul.
Thank you.
Bye.
Bye bye.